Stocks closed down Monday on the second to last trading day of 2024, a year in which all three major indexes posted strong double-digit gains. The Dow finished about 1% lower, while the S&P 500 and Nasdaq did slightly worse. The Nasdaq, though, is on track for about a 30% annual gain, while the S&P is headed for a 24% rise over the past 12 months, and the Dow is up 13% in that time. Abound Financial Chief Investment Officer David Lott attributes today's action to typical end-of-the-year activity, along with a deterioration in stocks that began a few weeks ago.
You're going to get some rotation happening this time of year. People just automatically selling the winners and buying the losers as they rebalance. So you see some of those tech companies, kind of large cap growth in general, selling off a bit. Seeing even last week saw small cap actually do a little bit better on some of those days. So overall, I don't think that there's a ton to see there. Yes, we're used to seeing green this time of year, but ultimately I think we're losing a little bit of momentum going into 2025, and that's what you're seeing take place.
Stocks on the move included Boeing, which fell 2% after South Korea's acting president ordered an emergency safety inspection of its entire airline operation, following the crash of a Boeing jet in the country's deadliest air accident in its history. And American Airlines added 1.5% after broker Raymond James upgraded its rating on the shares to outperform from market perform, citing an improved revenue outlook at the carrier.
The Tokyo Stock Exchange celebrated a record 2024 in a closing ceremony on Monday. Japan's Nikkei has risen nearly 20% this year. It's underpinned by a weaker yen and the Japanese central bank's low-rate policy. In 2023, it gained 28%. Within the broader index rise, though, there's been some turbulence for individual stocks. On Monday, Nissan slipped 5.73% to become the biggest percentage loser. But the carmaker's shares have surged over a third this month as merger talks with peer Honda surfaced. Despite the boost, Nissan's stock ends the year down over 13%. Lasertech, which makes inspection equipment used in chip making, fell 59% this year, while Fujikura, which makes wire cabling for data centers, grew sixfold. It became the top percentage gainer on the index. As attention turns to 2025, investors will likely be eyeing Donald Trump's return to the White House, including the threat of tariffs. But in November, Reuters reported that Asian markets are shaping up as surprisingly resilient investment markets, and that fund managers are optimistic the region can withstand tariffs better than Europe. Investors say Asia's exporters and supply chains have been able to better weather previous trade tensions. In the final day of trading for 2024, Chinese stocks registered their first annual gain following an unprecedented three-year decline. Hong Kong shares ended the year higher, supported by optimism over policy support. The blue-chip CSI 300, which tracks the biggest companies listed in Shanghai and Shenzhen, rose 14.7% this year. It finally breaks a losing streak since 2021, which was set off by the pandemic, property sector woes, and weak consumer confidence. The Shanghai Composite Index gained 12.8% in 2024, and Hong Kong's benchmark Hang Seng Index closed the year up over 17%, ending 4 consecutive years of losses. With an advance of over a third, banking stocks led the onshore market gains this year. The 4 largest state banks reached multi-year highs. And the chip sector surged nearly 54% as domestic investors boosted holdings in local semiconductor makers amid tightening US chip restrictions. Looking ahead to 2025, one analyst told Reuters that dividend-paying stocks could still outperform the broader market in the short term, particularly if US President-elect Donald Trump's arrival brings any market disruptions.
China's factory recovery could be losing steam. The closely watched Purchasing Managers' Index for manufacturers slowed to 50.1 in December. That's short of forecasts and barely above the key 50-point level that indicates rising activity. Tuesday's number suggests the effects of policy stimulus are yet to come through. China's economy has been struggling with weak consumption and investment. Policymakers have responded with a series of fiscal and monetary support measures. Among other things, they hope that will stabilise the struggling property sector, which has weighed on the whole economy. Around 70% of household wealth is bound up in real estate, making a recovery there critical to consumer confidence. But a new risk now hangs over China's economy in the shape of Donald Trump. The US president-elect has vowed to impose sweeping new tariffs on the country's exports. During his election campaign, he said the levies could go above 60%. Looking ahead, Beijing officials have recommended China maintain a 5% growth target for 2025. At an agenda-setting meeting earlier in December, policymakers vowed to increase the budget deficit, issue more debt, and loosen monetary policy as part of steps to boost growth. Last week, the World Bank warned that subdued business and consumer confidence and headwinds in the property sector would continue to drag on China in 2025.